Laura might have been disappointed, but all right. So, but real deal, we got Marina from Powerhouse HQ and Startup Weekend doing the interview tonight, and we have the marvelous Laura Mckenzie from Scale Investors. So everybody, let's do it for real now. Come on.
That's so exciting. Thank you.
I love that. That was really good. Well, I'm personally extremely excited to be here. I feel like I'm interviewing Madonna from my, area. But anyway, so first of all, I'd love to. We're obviously gonna get to the goodies that everybody's been here for. But I would love to start with your background, a little bit about your family, and a bit about you and your childhood.
Sure. So from the UK, haven't quite lost the accent yet. I studied science at school, and even when I went on to university, not really sure what I wanted to do. I ended up studying natural sciences. I loved geography and I was really good at science, so I did a lot of geology and went to some pretty cool places in the Atacama Desert in Chile and in southern Greece and in Scotland, and loved that. But I hated the lab side of things, and so I knew that being a scientist probably wasn't for me in the long term. So I ended up, in my final year, I did a management studies degree, and like a lot of people that were leaving university 17 years ago now, I was at Cambridge, and probably 90% of my matriculation year all ended up in London working for management consultants or law firms or accountants, whether they had studied engineering or theology or Spanish at university. It's a little bit of a different system to over here. And then I started off my career in London at PricewaterhouseCoopers. Not sure if we should mention that with a competitor in the room, but...
I was giving a quick look to your LinkedIn before tonight, and I saw you have an experience in Uganda, and that really popped my attention. Tell a little bit about that experience.
So first of all, we should say Oliocha, Nyabo, and you'll be Oliocha Sebo, which is hi girl, hi boy. I had travelled a little bit in Africa before, and after working commercially for 5 years in London, thought I want to use these skills somewhere else. So I worked in rural Uganda for quite a large non-government organisation. They had a budget of about $5 million, but we were 5 hours from the capital city, Kampala, and 2 hours from mains electricity and tarmac roads. But this was, I guess, my first experience thinking about entrepreneurship and identifying a problem and then someone seeing a solution. So when it was payday, and I was the CFO, so I was responsible for that when we had cash to pay, I would generally either send someone or go myself to the capital city, Kampala, draw money out of the bank, and then send it back on a matatu, which is like one of those minibus taxis. Thousands and thousands of notes. And, a few years later, I was back in that region and, working in microfinance and caught up with the guys from M-Pesa when they were just setting up. So, I think in the US, you can still pay by check. And here, we've got kind of mobile banking over the last few years. And we can use text messages to transfer funds. But, in East Africa, this has been happening since about 2007. And it solved a real problem. There was huge issues around fraud, and you never knew whether your money was going to get where you wanted it to go if you put it on the bus. It's very tempting to take a few for yourself that way. So, maybe that's where kind of the entrepreneurial seed was planted.
Well, awesome. And was that, I imagine, did you get back to the UK or you came to Australia after Uganda?
Look, I worked for a couple of guys in the UK, and one of them was an Australian gentleman, and he was moving back to Melbourne to run the valuations practice, as it was, for PwC over here, and so he invited me to come back and work here, and I did that for a few years, and then I got a call from a guy who ran an investment bank, and he said, I'd like to take you for lunch. I said, that's fine, happy to come for lunch, but I don't want to come and work for an investment bank. And he said, that's okay. I've had a look at your CV, and I've got another role in mind for you, and that was with an organisation called Opportunity International. They're a microfinance organisation, so they're also supporting entrepreneurs, and maybe this is where the supporting female entrepreneurs came in. And they've just got a windfall donation of about 25 million. They're an organisation that traditionally had turnover of 5 to 10, so that was a great opportunity to shape their investment strategy. And I spent 3 years going to and from India, and over that time we invested in 13 microfinance organisations, everything from a man and his wife with a plan to, so absolute startup, to an organisation that might have 350 microfinance clients at a time. So microfinance is generally loans, but there's also now savings and insurance and pension products. It's pretty sophisticated, but at that time it was, very much you might give someone starting off with a $100 loan. They would repay that with interest, and that was a good thing because it kind of showed the business was viable. And they might get another loan, a little bit more, and would move up through the cycles. And what I realised I was doing there, Marina, was kind of building a portfolio of startups, really, and some kind of growth companies. I thought, this is a little bit like what a venture capitalist does. I don't really have any experience in that. So I actually just jumped onto Google and found all the venture and PE firms in Melbourne, and I called them all and I explained what I was doing, and I said, I would love to come and meet with you, learn from you, and if we get on, maybe try and catch up with you every quarter and see what challenges you can help me with. And a few of them were pretty rude and thought it was if you were doing a charity, didn't really have any comparison. But Starfish were fantastic, and I caught up with John Dyson, who's the principal there, and so when I left Opportunity, that was a natural place to go and work. And I think the challenges that you face in building a portfolio of investments in microfinance institutions actually are pretty similar, I subsequently found, to building a portfolio of early stage investments. It's all about financial alignment. It's about the management. It's about growing a culture, building a team, recruiting the right staff, and having an honest and open discussion with your board, because once you've raised the money, those board papers shouldn't be sales decks. They should be, here are the things that are keeping me up at night that I really can't solve and I want your help with. And so, it was an interesting transition. It's a pretty non-standard path into venture capital. I'm not an engineer. I didn't have a business that I sold beforehand, but I learned from a lot of people that did.
Wow, it's interesting how you got from there, but I believe all those, it's what makes very interesting to have that mix of people, especially when startups are pitching to, because you don't want everybody to have very similar background. You want them to be able to understand where you're coming from. Mm-hmm. But tell us a bit more about Starfish. So that was just before you started Scale. Mm. So what learnings and what was the big insights that you decided to take with you that you from your experience at Starfish?
Look, I was one of 6 investment professionals. The others were all males, all fantastic guys, super bright. And that's pretty standard in the financial community, whether you're in a standard bank or a private equity firm or a venture fund, or whether you're in the angel community. Women do tend to be in a minority. And I think there's a real unconscious bias that I had started to identify in that market. When I left Starfish, none of our active portfolio companies, we had about 25 at the time, had female founders. And there were 5 companies who had women on their boards. And like you say, Marina, gender diverse teams do better. They make decisions better, they collaborate better, and it just seemed odd to me. But I think the problem is maybe from both sides. I think as entrepreneurs, you seek out people like you or people you want to become. And so I think as entrepreneurs, people tend to seek people of the same gender. And I think as investors, you tend to invest in people who've had a good introduction to you, and that tends to come from your network. And those networks do still tend to be very much along, kind of your gender lines. Yeah, so I saw the problem, and I started talking to a few other women around Melbourne. Really Scale was Susan Oliver's idea. She's an entrepreneur herself, and in going and pitching to a group called Golden Seeds in New York, she had just got a tremendous reception, and she'd really struggled over here. And she's had a few fantastic successes in selling to Comcast, for example, one business in the US. Carol Schwartz, one of my other co-founders, she's a really experienced investor and entrepreneur, and I think every year, I'll mention another accounting firm here, sorry Nick, EY with their Entrepreneur of the Year award, which at the time when Annette Kimmett was running the Melbourne office, she was closely involved with locally. Carol would ring Annette and say, where are all the women in the Entrepreneur of the Year shortlist? And they just weren't there. And I don't know how many women are in the Deloitte Fast 50 this year, but we'll soon find out, okay? Yeah, so I guess we saw the problem, and we also really through the networks that Carol, that Susan, that Annette had, who now runs EY's global middle markets practice, that's a huge role. Through their networks, there were a lot of women they'd identified who were really keen to invest in startups, who perhaps had already or who wanted to get into the space. So we thought we'd give it a try.
Yeah, so understanding a bit more about Scale, because I remember I went to the launch event, and one of the things that surprised me was that Scale is not just helping the connection between investors and startups, but actually educating investors, so preparing better investments as well. So I'd love to know a bit more actually how it works.
Yeah, sure. So in terms of the education side of things, as I say, we've got, if you like, 5 archetypes of Scale angels, and it's good for you to understand who your potential investors are. They are, there's women who are non-exec directors. There are women who are experienced entrepreneurs and want to, probably wish Scale was around when they first started their business. There's experienced investors who are happily share their mistakes and companies that haven't been successful, as well as those that have. There's partners at professional service firms who can't really invest in the stock market because of all the client conflicts that they're stuck with. So they really are looking to angel investing to have a little bit of risk in their portfolio and return. And then lastly, there's a number of high net worth individuals who've perhaps come from a wealthy family and are looking to diversify in this space. So with all those backgrounds in mind, we have an education program that really steps through risks around angel investing, kind of the Scale process in general, how to negotiate a term sheet. And incidentally, there's a great paper, Harvard Business School review paper called How to Negotiate with VCs, that if you're looking to raise money from anyone, whether it be friends, family, angels or VCs, I'd recommend reading. It kind of sets out term sheet language just like body language would be in any other negotiation. We talk about leading a deal. We need to have someone put their hand up and say, when we're looking at investments, I'm happy to lead the deal and be the lead angel investor, perhaps sitting on the board, but also making sure others do their work. And then we talk about sitting on the board of a startup. It's very different to sitting on the board of a listed company. And we have a strong focus on, on exits. We try and encourage all entrepreneurs to have, it exits on the agenda at every board meeting, so it's always on your mind. So we do that once a month. We run a couple of sessions, one in the evening, one in the morning, so depending on whether someone's still working full-time or not, they might prefer one session or another. And on the alternate months, we run our investor forums. We do those every 2 months, and the reason we do it every 2 months is we commit to doing our due diligence and either investing or not within 8 weeks, which is pretty quick. But what we started doing that every month initially, and what we found is people allocate a certain amount of headspace, wallet share, and time. And we want to make sure that when you pitch, everyone in the room is wholeheartedly focused on your business. They're not kind of thinking about something else they're halfway through doing due diligence on in the background. So that's a little bit about the process.
Yeah, so, and in your opinion, where did you went first? So did you make sure you had a pool of investments first, or were you doing kind of both at the same time?
Yeah, that's a good question. A lot of the businesses that have been pretty successful in Australia, whether that be Kaggle or Design Crowd or Freelancer, they're all marketplace businesses, and essentially scale's the same. We're trying to build a marketplace of investors and entrepreneurs, and we're really a little bit like a matchmaker at the moment. And so I made sure that we had at least 10 investors signed up, and I knew they all have pretty deep pockets. The minimum investment per deal is $25,000. We want to make sure if you're looking to raise 250 or 500,000 that we can get there. So I made sure we had 10 of those, and then I started talking to entrepreneurs in July. Look, I probably have conversations with about 250 entrepreneurs. Some of them are super early, not ready to raise. Some of them are maybe too late. And I think about 85 now have formally applied to us. Why reinvent what's working for other people? So we use an online secure deal flow platform, so you can be pretty comfortable around confidentiality. It's got some workflow tools and things like that. And we've got 55 angel investors now. 55. Did I tell you that? Yeah. And they're not all women. We've got 8 scale males. And maybe that's my question up here tonight. If you can think of a better name for these sophisticated investors who've been very successful in their careers than scale males, I'd love to hear that.
Tell us a little bit about the startups that had been funded through Scale. So what of the story and what stage were them?
Yeah, okay, so we did our first investment in December last year. Actually, there was a few angels that missed out, and they've topped up a little bit since then. So we've invested about $750,000 in Paloma Mobile. Who's heard of Paloma? Okay, there's a few hands. But I guess what's a little bit different about them, so first of all, it's co-founded by a lady called Jennifer Zanish. What was attractive about the business? She was a serial entrepreneur. She'd had 4 or 5 startups before, and the last one had been with her co-founder of this business, and they'd sold their last business. So we got some comfort in that, we knew that she knew kind of what she was doing. They are targeting a huge market. They're looking at the growing number of people that are really accessing the internet and accessing that on their mobiles for the first time. It's estimated to be 3 billion people in emerging markets using those kind of $50 to $100 smartphones to communicate. And something like Facebook or Instagram or Snapchat takes 20 megabytes to download, and you might consume that amount or equivalent each day. They have a technology that really compresses the data, and they're able to have an app that does a similar thing to that called Photo Chat, which uses a fraction of that data to download. So if you like, it works on the street. The other real difference about them is their customers are operators. So, Telstra don't know that, I was liking a photo that Kate posted earlier today, whereas with photo chat, the operator can see kind of who your friends are and who you're talking to, and so there's interesting data analytic play for them there. And the other interesting thing that happened with that investment is there's this natural matching that goes on between the lead investor and then whoever goes on to sit on the board of that company that Scale Angels have invested in. And so with Paloma, there's a lady called Dina Schiff, who is now chair of Paloma. Some of you will have heard of Dina. She was a senior executive at Telstra and actually set up the Telstra Ventures Group when she was there. So there's some really great connections and experience that she can bring to their work in the Philippines and Indonesia. So that's the first one, and that deal was led by a lady called Mary Beth Bauer, who is originally from the US. We've got quite a few people with American accents around the table. There's this strange phenomenon. I don't know whether it's their comfort with risk, but I think there's about 8 of the 55 that have US accents around the table. They've been here for various lengths of time. And our second deal was also led by an American. So come on, Aussies, we need to lead some deals ourselves. And Laura Melton is an engineer. She's an MBA. She worked for a startup in Silicon Valley 15 years ago, looking at QR codes. And so she was a natural fit for Sandra Mao, who is the CEO of our second investment, which we closed in March. And we syndicated that deal. We brought a few other investors on board, and we helped Sandra with a Commercialisation Australia grant as well. So she raised probably 3 or 4 times what Scale Angels put in through us working with her and helping with those connections. And she has a kind of a visual search engine technology. So the odd thing is that most of the trademark databases around the world are all text-based. But most of us, when we're thinking about a logo, really think about the design and the look and feel of the visuals. And she is using this visual search technology so if you're looking to launch a business, you can check you're not infringing on someone else's trademark, and likewise you can check someone's not infringing on yours. I think about 18 million trademark searches are done every year, and so that's a big enough market for us. And we're looking at a couple of deals now, and I think we'll probably do 4 or 5 deals a year, and I think by the end of September we'll probably have invested between 1.5 and 2 million across the group.
Exciting news. Well, I started my business this year, and I'm a designer, so I don't have a lot of business background, and it's terrifying, but it's also very exciting. So I'd love to hear from you. What are the learnings you're having with Scale? So as a new business, as being also in some form an entrepreneur and starting something completely new with a new market, with having to do so much ground for, I guess. Yeah. It's starting to set up a good network and environment for it to grow. Tell us a little bit about that story.
Look, I think every investor is different. There are certainly some investors that are looking for the unicorns, those businesses that are going to be multi-billion dollars in 2 to 3 years' time. Super high-risk strategy, because there's going to be a lot that fail along the way. And that's right for some people. There's others that would quite happily invest in property and have a portfolio along those lines, different attitude to risk. What I'm getting to do is get to know all of our Scale Angels and get to know the entrepreneurs and what works well when people pitch and what doesn't. One of the things about angel investing that differentiates it from venture is that with angel investing, it's your own money. So it can be a little bit more emotive. But also you still want to build a diverse portfolio, some later stage, some earlier stage, different industries. So, there will be a lot of angels that invest in later stage businesses, maybe those that have already got revenue, to complement their very, very early seed rounds. So the businesses that have been most successful are those that have given a demonstration pretty early on in their pitch, particularly if you're presenting to a wide group of angels. There may well be someone who is an industry expert in what you're doing in the room, but there's also likely to be a whole host of others who have no idea about the technology. We've got a patent attorney in our mix, we've got plenty of engineers in our mix, and so throughout due diligence, we'll get to all of that. The key thing to do in your first couple of pitches is to really explain what it is your business does, what problem it solves, why people care about that, and if they're going to want to pay for it. Those businesses that pitch to us with wireframes hasn't been much appetite for. I know it's a little bit of a chicken and egg situation with getting funds for development, but there's plenty of other options to try and look at to do that. You know, the Victorian government is one of the most forward-thinking in this space across Australia, so they have a technology voucher program which matches your funding 4-to-1, so have a little look at that. City of Melbourne have some grants. If your business operates here, you can. I think the largest one of those is up to 30,000. And maybe chat to your family and friends until you can get to a stage where you can give a demo. That's if you're coming to present to scale. And we like to have some feedback from potential customers. Like most of the businesses that pitch to us are really embryonic, haven't quite worked out their pricing model, haven't probably got any sales. That's all fine. We want to know that you're across the data analytics, that you're testing things and that you're changing things. The other really important thing is we really want to think we're going to enjoy working with you. We probably want you to be doing the same test on us. And so we really look for those entrepreneurs that have either surrounded themselves with other advisors already. You might have an advisory board, you might not have a formal board, that you are quite comfortable taking feedback on board. You know, it's likely that lots of people are giving you their advice, and some of it, you know, you'll put down to noise. But to really be receptive to that feedback and thoughtfully process it. And that's quite hard to get across in a short pitch. So, you know, things like making sure your answers to questions are quite short so that the investors can ask many more questions. Because it's really in that questioning phase that people get a sense of, yeah, I like this person, I think I could really back them, or I really like this idea, I really get what she's trying to do. And if you don't give them the time to do that, you can't get them to that level of comfort.
What would be, I think we're already kind of starting that, but what advice would you give as a pathway in mind for someone that's starting a business or thinking about it? So the first couple of years where we're still kind of trying to figure it out, maybe events or things they can read or learn, or what would be your first few things in mind?
Okay. Well, a great idea would be to go to one of the startup weekends that Marina's been pretty involved with.
I talk about those later.
I actually have a different view about networking. It's important to go to different events, get some different ideas. Maybe you might find a co-founder. But if you're spending 70-80% of the time that you have available, because you might be, you know, working a bit to raise a bit of cash as well, on networking rather than actually starting to build your business, I think something's a little bit wrong there. So, you know, get involved, get your hands dirty, start doing something, and if it doesn't work, that's fine. You know, pivot, change, work out where you need some other team members involved. You know, just get going. I think we can over-plan things.
Cool. I think one question that I had in my mind as well was, what would be the perfect startup to invest and why?
What would be my perfect startup? Look, I guess I have a strong view, and maybe, you know, my experience with the bus and M-Pesa shaped that a decade ago. But, you know, there's a growing middle class in a lot of these developing nations, you know, that lack a lot of infrastructure. So, you know, technology is leapfrogging things left, right, and centre. And there are huge populations with real life-changing problems to solve, not, you know, in a hashtag first world problems kind of world. You know, and I think the best ideas, the boldest ideas, the biggest ideas are either going to come from those markets or be trying to solve problems that are faced in emerging markets. You know, one of the things I've noticed, and you notice things in clusters, there's 4 or 5 companies that have all launched businesses around sanitary pads in developing markets, because it's a huge issue for girls' education. You know, every month not going to school because of embarrassment or not being able to afford those. And so, you know, if you're developing a product there that there's a huge market for, it's a subscription market, you know, I think that's a pretty cool problem to be trying to solve. So, you know, that's I guess what I'm most excited about. And there'll be other people along the way that I just love the entrepreneurs. You know, it's about resilience, it's about relationships, and that kind of, you know, chutzpah to, you know, they're going to do well. And I think that's a little bit of a gut feel.
Oh, wow, amazing. I'm thinking if we can start maybe asking some questions as well. We already have a couple here, so let's start from that. What do you look for when you're judging investment opportunities? So we touched that up about it a bit, but is there any key messages maybe we can give to people in looking?
Gosh, I think I've probably answered that. Like, personally, I really look for the entrepreneur to be receptive to feedback and to have attracted other people to their ideas, both as advisors and as, you know, employees or co-founders. I think it's very hard to be a sole founder and a sole investor in your business. Yes, that's the only thing to add there.
So in exploring more of that feedback, I imagine you're pointing that out because probably you've been to situations where was a small feedback could have maybe solve a big problem kind of thing. So, or at least people kind of not being really open, because I imagine it's such an intense journey for the person running a business. So do you have any stories or anything that you remember that you could share here with us?
Yeah, look, I think a couple of things. We haven't really talked about the finances at all. You know, we're investing in you for your ability to have a vision and to think about how you articulate that vision into a product or service and grow it and recruit team. And at the same time, we really expect you to be across how much money is in the bank, how much you're spending every week. You know, that you can see. You actually don't need to be across accounting to do it. You know, things like Xero, super easy to use. You really need to be across your financials. And we expect you to do them yourselves. We expect you to pitch in person. It's pretty rare for someone who's raising angel capital to have wasted money on, you know, advisors at that stage. That happens later, generally, because really at this point it's you that's the most important thing in the room.
And when they're pitching, what's usually the structure that gets more traction? So is there something that gets better? I guess people get more open when you start. Is that a structure that you have in mind?
Yeah, so we people apply online to us. We get them to do a short video, really, so we feel like we've met them before. It doesn't need to be super whiz-bang animated. The 2 we've invested in spoke to the video in a grey room. You know, it really wasn't anything glamorous. So when people come and first pitch to us, that's through a screening process, and they only have 7 minutes to pitch. make sure you get to what you're trying to ask for. Make sure you get to what you think the business is worth. 7 minutes really isn't long. You probably don't have time to do a demo in that 7 minutes of your product, so just focus on the slides and practice it. And I'm happy, I've sat down with quite a lot of entrepreneurs, I'm really happy to sit down with you and go through a few dry runs before that. Then we select about half of those that are screened every month. We do that screening on the third Tuesday of every month. We invite 4 every 2 months to come to an investor forum, and then you have 45 minutes. So the pitch is 10 to 15 minutes, and the questions 30 minutes. And in that 10 to 15, you really need to give a product demo. If it's a physical product, hand it around. If it's an online product, you can show us on the screen. So I'd say of that 15 minutes, you probably want to spend 2 or 3 minutes giving the demo. And wait until you've got some nods around the room that people have understood what you're saying. Make the pitch so engaging that people, and so clear and so crisp that people don't want to interrupt you as you go. One of my co-founders has just got back from New York. She went to Golden Seeds, who are the inspiration for scale, and actually I was speaking to them this morning. The entrepreneurs that pitch in those investor forums, they are no different to the entrepreneurs here in terms of substance, but when they get up and pitch, it is word perfect, it is down to the last second, it is well structured, and so the questions come afterwards. People ask questions during the pitch if they're not sure about something, but also when they're really excited. So I think it's a good idea to say, I'll take questions at the end, but when you are doing your pitch, just make sure it keeps momentum.
Did you notice any big difference from women pitching? So being in a space where it's more women, or any particular advice from them?
Oh, there's less bullshit, that's for sure. Yeah, I think women are honest. We've had women come and pitch to us who might be 5 months pregnant or 6 months pregnant. That is totally fine. What we want to know is that you've got a plan in place to execute on your vision. You've got a budget which makes sense, and you haven't forgotten to think about those extra people you might need. And so, honesty, I think is, a little bit different. But be careful. Don't take it too far. Don't be self-depreciating to the point where you're underselling yourself. So one of the things I advise most people to do is, when you're looking at kind of that financial side of things, really focus on the next 12 months. When you're raising money from angel investment, that's what I'd generally advise, that you're looking to raise for at least 12 months. And make sure you are across all of those details in that 12 months. But we don't know what the price point is that's going to work. So it's going to be much, and probably there you've not got much revenue, so it's much more on the cost side of things. And in 3 to 5 years' time, we don't know how many you're going to sell, and the price is such an important assumption in that what we want to know is that the addressable market is large enough, and that you have a strategy of how you think you're going to grow your business, kind of building block up. And then you've got this kind of blue sky here. We're not interested in the kind of pitches. We just want to hear the this and then what is there and how you might get there. We had a couple of ladies pitch to us. I really love the business, and I wish I had let them do this in hindsight, but I always get all the pitches in advance. I go through them. I make sure that I think that they'll present the entrepreneur in the best light. And they said, "Oh, we've just got one slide we want to change. Can we just give you this one?" And they gave me a USB, and it was the financial slide. And their financials, year 1, year 2, that made sense. And then all of a sudden, year 3 and year 4, the crazy town. And they had delivered their pitch to a number of guys. And not in this town, but in another place in Australia. And and cities are different in terms of what their expectations are, so that's another thing to bear in mind. And the guys had said, you're not ambitious enough, and so they changed the forecasts. And so, you need to be a little bit sensitive to who are your investors in the room and do your research on them beforehand.
That sounds tricky, but it's good to know. I love this. I really like that question. How much traction is enough traction? So, what does it make? How can a business look attractive with traction?
Yeah, look, it's obviously different for different businesses. If you're kind of a medical diagnostic or treatment business, that's very different to if you are a pure, SaaS-based product that is quicker to get to market. We want to know that there's customers that want that problem solved and that you've spoken to them and they've maybe tested your product and you've listened to them and you've changed it. If it's just an idea, unfortunately we're not interested. It's far too early for us.
Let me see. Ooh, touch with that one. So here's asking about Australians being ambitious. What's your take on that? And maybe even what's the mix with risk adverse as well?
I think actually one of the great things about being in Australia is most businesses, if you're not Seek or car sales or realestate.com, need to look outside of Australia in order to get to a size that makes sense for an investor in terms of your revenue growth. And so you've got to think global from day one. Everyone naturally thinks about the US, maybe because I'm from the UK and I know it a little bit more. I've seen that economy transform in the last 5 years, and there are huge opportunities for entrepreneurs in the UK and in Europe, and Asia's on our doorstep. So, when you're thinking about going, this question's about global markets, but I often hear, and then we'll go to the US. That might be right for some businesses, but it might not be right for others. So do what's right for your business, not necessarily what's right for the person sitting next to you's business.
I think the question I was reading before. Oh, okay, new ones. Okay. Is there a minimum value and is expected money return for scale?
Yeah, good question. So this is on our website. We are looking for businesses that we believe when we invest will generate us a 5 to 10 times return. That's taking into account any future capital you might need to raise to get there. That's medium to low for angel investors when they first invest in a business. In reality, if I was to invest in 6 businesses, 2 of them would fail and I'd lose all of my money. 2 of them I'd probably just about get my money back. And 2 of them I might make a 5 to 10 times return. So on average, there's a number of studies that show this both in Europe and in the US, the average angel investor earns a return of about 2.5 times over 5 years. So the mathmos in the room can work out the internal rate of return on that, but it's around about 20%, give or take. So it's a hugely risky investment, and there's a massive asymmetry of information. You know everything about you. You've been you your whole life. You've been working in your business for however long. We've met you for what? Little video, then 7 minutes, then 15 minutes or 45 minutes. It's so that's something to bear in mind. In terms of minimum value, we say we'll invest anything from $100 to $1 million. Our average investment so far has been about $500,000, and I think that's probably what it will continue to be. And for us to just kind of working backwards on that, the average, I like triangulating data because I'm a scientist, so the average trade sale in Australia and in the US is a little bit shy of $20 million. So not every business is going to grow to hundreds of millions or billions, and you might not need to raise more capital, or you maybe don't need to come to angel investors at all. And so, if we're looking to invest, say, $500,000, we need you to have a pre-money valuation, so that's what you think the business is worth before we invest in you, of around $2 million for us to believe that if you raise no more money, we think we can generate a kind of a 5 to 10 times return. I think we're really happy to syndicate with other groups, and we're looking at a deal at the moment that are looking to raise about $1.5 million. They've raised some money from other groups, and we're kind of muscling in on the round. Yeah.
I think the next one is, what's the key ingredient to investment winning pitch? Everybody wants to know. It's like their recipe.
Timing, attitude, and demo, I would say. Make sure you cover all you need to say, that you get lots of information to retain that excitement. We don't want to be bored. But make sure you finish on time, whether that's whatever length of time the investor has allocated. Demo, I've talked about that a little bit before, and attitude. And again, I've talked about that.
Yeah. What is the future of scale investors?
What is the future? Well, I've just signed up for a life of compliance. We've just got our financial service license, so we'll be setting up a co-investment fund that'll sit alongside the angel investors. So, that's good for all parties. It's good for the angel investors, because those businesses that they're investing in will be able to either run for longer or employ better people, and that's better for their returns. It's good for entrepreneurs, because they it maybe won't take them as long to raise a round, and they won't have to kind of look to so many other groups or individuals. And it's good for investors in the fund, because they're leveraging off the wisdom of such a diverse angel group. And you talked about on diversity when we first started. Those groups will make much better investment decisions than an individual. So that's what's next.
Is there a Hong Kong office?
We would love to grow scale globally too, but we've also got our feet on the ground, and we want to concentrate on growing scale in Australia. But certainly there's been interest from, in fact, I've had emails from women in Korea and in Japan and in Malaysia saying, when's scale coming to our country? So anyone that's an expert on licensing or franchising, I'm really happy to have a little conversation with you.
I'll take one more question.
Yeah, sure. Is there anyone that would like to ask that actually is not using?
Yeah, nobody was really engaging in it. So.
Yeah, it's fine. Here, yeah.
Laura, someone that's actually pitched where you thought they had a great idea, but the pitch didn't necessarily reach those three, time, attitude, and demo. But you saw that you thought, hang on, these guys, I think they've got something there, but they didn't present well.
That's happened plenty of times. Yeah, and generally, we'll give pretty raw feedback along the way. And so if you kind of borderline when we're doing screening and that happens, I'll almost verbatim quote back what different people have said. And I'm a big believer in honest, direct feedback, because if it doesn't help you with your future pitches for us, it either makes you think, well, hey, those are a little bit crazy investors, I wouldn't want them on my board or my shareholder register, or it helps you when you're pitching to others too.
So it's like a driver's license, you can reseat.
You're really, really welcome to reapply to scale. And one of the things we suggest is, if we've said no to you for specific reasons about your business, that you should wait probably a 6-month period, so there's a tangible change when you repitch. Otherwise, things just get a little bit cold and stale. And like I said before, you're better off getting your hands dirty and getting on with things.
Cool.
I would like everyone to get back on their feet and say thank you, big thank you to Marina and Laura from Scale.